Okay, done. So welcome everyone at our with Nikita webinar, Introduction to C Market. So today we are going to cover very actually difficult, very complex topic. And you know, the C market kind of not easy to explain, and it contains so many layers, so many things you can dig into. But today our main task is just to give you basics, like understanding basic things about C market, to explain you how trading does in green coffee sector as well, and also give you some recommendations how you can change, how you can improve your purchasing strategies if you're a roaster or green coffee supplier as well. So we are here today not to teach you to be traders, but just to give you some insights about C market. Let's start with a small introduction. So the webinar is going to be led by us, me, Daria, and Nikita. So I actually work all my life in coffee, more than 17 years. And I invited Nikita because I'm not trader, actually. Yes, I'm coffee expert. I'm expert about mostly sensory sign, about supply chain, about other topics, that about trading. But since I work in green coffee sector for the last 10 years, and I always was sitting next to the coffee traders, and I always need to communicate with coffee roasters and explain them how our pricing works. And I had to learn about C markets anyway. So I'm here today to explain you some basics, and Nikita will help me to explain more difficult things.
Well, I will also actually explain basics of trading. So there is more and more levels, advanced levels of green coffee trading and trading overall. So my coffee path is very similar to Darius. I also worked for Russian green coffee trader back in Moscow. My coffee path started from 2017, and well, right now for 1 year I work here in Dubai for the UK green coffee trader, and actually it's very similar to Daria because it's basically it's very similar. So we'll try to show you some interesting insights about the coffee market. Let's start.
Yeah, let's go on. So what's our plan for today? So our plan for today, we will start about what is the C market, first thing. Then I will give you some historical reference, why it appeared and why it was so important. Then we will speak about coffee contracts, one of the, I think, the most important topics here. The next, how the price is built, how specialty coffee is connected with C market. Then the last two things, we're going to finish our webinar. I just give you some recommendation about purchasing strategies, and Nikita will tell you his thoughts about if this current level is a maximum or maybe not. We'll see some analysis and forecasts for the current situation on the market. Just a second, let me in another people here. So regarding the questions, because there's so many people who join us today, let's make it the following thing. I'm gonna ask you, I give you a sign that now it's time for questions. Let me know if you have some questions. Yes, because for me, it's easier to explain, to talk, not being interrupted. So once I finish, my thoughts about each particular topic, then I will allow you to ask me questions. It will be easier for me, and I think it will be easier for Nikita. So if you will have some questions in the course of the webinar, you just, can write them down in your, some on your paper or somewhere, and then you can ask them after the topic, this particular topic finishes. Okay, so you can raise your hand, you can write on chat, and of course, we make a webinar not only because we want you to tell about this topic, but also we want to hear your questions as well, and I think there will be many of them. Okay, I hope everybody is joined, and now we can start our webinar finally. So what is the C market? So when we say C market, we mean actually ICE. We mean Intercontinental Exchange, which is placed in New York, actually. And when we say ICE, we mean particularly the coffee exchange. So the coffee exchange is a part of Intercontinental Exchange. In general, there's so many exchanges in the world that trade different things, like stocks, commodities, goods, energy, currency, bonds, equities, different things. And coffee, one of them. And if we're speak particularly about ICE, so you just need to know that this is kind of legal entity that is placed. It's actually a physical place as well, but it's a legal entity, and it unites 13 global financial and commodities exchange. The other important thing to know that Arabica is traded in US cents per pound. We will show you how it looks actually. And regarding Robusta is traded in different place. It's traded in London, at London International Financial Futures and Options Exchange. And Robusta is traded in US dollars per ton. So it's, 4-digit numbers. So for Arabica, it's 2-digit numbers. For Robusta, it's 4-digit numbers. And C, I always, all my life, I thought that C means coffee, but actually it means centrals. Yeah, very interesting fact to know. So next slide. So commodity exchange, and as you all know now, coffee is a commodity, is a marketplace where, according to certain rules and procedures, trading of standardized, homogeneous, and interchangeable goods takes place. And when we say commodity, we mean that these particular goods homogeneous and interchangeable. What does it mean? It means that if you want to buy, for example, and we will speak a lot later about it, coffee from the exchange, you'll just, get some coffee. It can be coffee from any kind of region, from Brazil, from Kenya, from Central America. For us, it makes sense. For us, it's very important where from we get our coffee, but in connection with exchange and with the coffee exchange, when we say that this is commodity, it can be, coffee from any kind of region, but not all regions, we will mention later, but we just receive some particular quality, great, but it can be any kind of coffee. So the main characteristic of the exchange that it's the prices there are very volatile. What it means when we say volatile, will means that the prices for Arabica, for Robusta, they are changing all the time. They're going up, they're going down, and you actually never can predict where it will be tomorrow, in a month, in 2 months, in half a year, in a year. And this is how, exchange and sea market in general creates, a lot of troubles for us. The functions, the main function of the exchange, and we will speak today about all of them. So the first thing, coffee exchange level or sea market level, it serves as a price indicator for us. The second thing, so exchange guarantees obligation fulfillment under coffee contracts, and we will speak today about coffee contracts a lot. And the last but not the least thing, that coffee exchange allows us to hedge goods. So about hedging, we will speak today as well. It's kind of one of the most difficult but very important things today to talk about. So I mentioned that exchange is very volatile. So the prices always go up and go down. So you probably want to know what affects, the sea market, why it always go up or go down. And basically I can say that, shifting supply and demand affects sea market. Yes. So let's think about it. So in general, the higher supply and the lower demand, the price go down, and vice versa. The lower supply and higher demand, all this, it makes price go up. What does it mean? Like when we have a situation on the market where producing countries, like we can see they have like a big harvest volumes. Yeah, we have a lot of coffee on the market. They have a lot of coffee to offer. And at the same time, if we see the trends on the market that consumption go down, but I think it's not about our current situation, but still, then we can see that the prices go down to kind of, encourage people to buy more coffee. And vice versa, when we can see that for some reasons our production decreasing, if some situation happens, or for example we can see situation that our consumption is growing, what we see for the latest year on the market, then our prices go up. So it's kind of, the basic rule of economics. The thing is, so in general, in the world, we have like different factors that can apply that can affect demand and supply, and it can be some natural factors like weather conditions or like plant disease, and it can be some political situation in the world. It can be such factor as US dollar value, because the dollar is the main currency, main trading currency in the world. So of course, if it becomes weaker or stronger, it also affects not only coffee exchange, I think other exchange as well. Like interest rates and level of inflation in the US also can be factors. Like transport cost can be factor, and technical speculation can be factor that affect demand and supply. So let me give you some examples here, what I mean when I say about, like, for example, weather conditions. I think you all remember like 2021, when we had a frost in Brazil. And that time, the market grew up from, if I'm not mistaken, like 150 to 250 or even more. So what happened? Like in Brazil, they had frosts. It's directly affected, their harvest. It's directly affected volumes that Brazil can deliver to the market. And so, of course, it affected the sea price. And in this connection, it's very important to say that, of course, not weather condition and natural disaster in all countries affect sea market. No, of course, we usually fall in an up situation in such big coffee producers as Brazil, Colombia, and Vietnam, and same concerns like big consuming countries like, I don't know, US, absolutely, maybe some situation in Europe, in China. So of course, when we say like, okay, like these factors affect shift in demand and supply, we mean, like big producers and big consumers. Regarding the nature factors, so we can say like frost in Brazil, 2021 affected pricing. Like today, for example, they have some, like, that harvest season is starting in Brazil now, like late April, May. So they not sure how much they can harvest. So that's why, it's also, affected prices go up. This is how it works, unfortunately. When we say about geopolitics, it means some political situation in the world. For example, the war. Yeah, the war between Russia and Ukraine. There was a forecast that maybe this situation can affect decreasing consumption in Russia. So somehow it can affect sea market as well. And the interesting thing to add here that, like sea market can be affected. It's not the real thing, but forecasts, as well. Like it's not necessarily that this war affected consumption in Russia, but when it started, there was, some, we weren't sure that consumption will stay as it was before war. That's why it affected. Regarding transport cost, I also have an example because during pandemic, the freight costs increased significantly. It was another problem besides pandemic that year, 2020. And of course, it also affected sea market. We saw that sea market go up. It go up like from 90 cents per pound to like 100 something. So like all these factors in the world, they affect changing the price on the sea market, going up or going down. And technical speculation. This is the most interesting thing, because the problem is not only volatility. Yes, it's volatility, but the main problem that we are coffee people who works in industry, who produce coffee, who buys coffee, we actually can set price for coffee. And the another important thing, like we can't predict the price of coffee as well. And another thing, and we will speak about it later in regards of specialty coffee, that because of the volatility, yes, it can go from, I don't know, like 100 cents per pound, 90 cents per pound, to like 200, 300. And sometimes it covers cost of production for farmers in some countries, and sometimes it doesn't cover for farmers. So like all this stuff, all these things, they create a certain insecurity on the market. And we not only buy and sell like real physical coffee. Yes, like there's so many people who just trade futures, who just buy not physical coffee. Yes, they buy and they create artificial demand, and they sell and they create artificial supply, and they not actually buy and sell like the real coffee, the physical coffee, but they affect C market changing, going up or going down. Of course, I think it's not about the big shift, but still, when we see some tendencies on the market, this speculation, they really can affect going up or going down significantly. And in this situation, it's like, okay, we're coffee people, but we don't control our prices for coffee. And sometimes, it's like, it's really sad, but it's, it works how it works. And it's, in general, it's bad, but historically, it works like this. And now you may think like, wow, so why do we have this exchange? Why we use it for, as a price indicator? Let's let's give up, using exchange. But of course, like we cannot just, give up. And we just need to know that, in the past, exchange was created for better. It helped a lot to improve industry, actually, because before it was created, there wasn't any rules, how we trade coffee, how we sell coffee, how we buy coffee. And for example, coffee just was shipped inside the cargos, and nobody could guarantee that this green coffee, which is very, very sensitive to humidity, to off flavors, nobody can deliver, like guarantee that you will get your goods in a proper conditions. So when exchange was created, the main goal was, to protect coffee importers from price increase, because that time Brazil was becoming a monopoly. If you remember the coffee history, Brazil at the time started to produce a lot of coffee. So of course they started to dictate prices to coffee buyers, to coffee importers. And of course they didn't like it. That's why they created, okay, let's unite and create our own, infrastructure that can set prices for the product. And it also set rules for the trading as well. So now exchange was a kind of third party, which guaranteed to the seller that seller will get his money for the coffee, and exchange guaranteed to the buyer that the buyer will get like this particular coffee from this particular region, particular grade as well. And they also created shipment standards. So because the way the coffee shipped now, coffee wasn't shipped that way, in the past. So of course, that time it was a very, very useful and beneficial for all parties. And the other important thing to mention here about the exchange coffee standard. I don't know if you know, I think you all know about Q graders, who are authorized, who are calibrated to say if these or that coffee is a specialty or not. But there's also so-called C graders, who actually authorized to check the coffee and say, okay, this is exchange quality, and this is not, this is grade 1, this is grade 2, etc., etc. So exchange Coffee Exchange created a first global standard for coffee. Of course, in each particular country, we have their own standards. As like for example, in Brazil, they have like New York to 1718 strictly soft fine cup. They have a standard for number of defects in green coffee, defects in cups, cup quality, and screen size. In Ethiopia, for example, they have a grading system which has a criteria like number of defects in green coffee. And in Kenya, they don't have defects in green coffee, they have screen size. So in each particular country, they have their own export classification. But the first global classification was actually exchange quality. And depending on, what quality, what grade each particular coffee has, they have a, system to build a price, which, has a lot of sense. So if, for example, if it's kind of grade 3 exchange quality, would trade according to C market level, yes? So makes sense, okay. And if it's grade 1 or 2, so we trade with premiums. So for example, plus some cents per pound or dollars per ton, because it's a better quality, the coffee contains less defects. And for example, grade 4 and grade 5, which we can say it's kind of low grades, we trade with the discounts or with negative differentials. So we will speak about it when we will talk about price breakdown, price building. But like when we say, like when we talk about exchange and about C markets, we had to say so many negative things, but we need and we have to and we should add that in the beginning it was a very good thing actually, but it turned out as it turned out. So what else to add here? Regarding historical reference, so Coffee Exchange is a part of New York Stock Exchange, and New York Stock Exchange is a part of ICE, because ICE, Intercontinental Exchange, unites not only stock or exchanges that traded some goods, but also the other financial exchanges that trade, like currencies, bonds, equities, and other stuff. So, yeah, I think for kind of introduction, what is C market, that's it. And it's time for your question, guys. If you have some question in regards of what I just said, or everything is clear.
I think it's all clear for everybody.
Okay, thanks, Natalia. Then let's move to the coffee contract. So coffee contracts, I think it's one of the most important topics here, because when I was working in Russia as well, and when I came on local market as well, I can see that local coffee roasters, they just don't understand this thing. And, I mean, in green coffee sector, coffee is treated differently. As, for example, you can go to some grocery or some shop and buy coffee from the shelf, yes? So when you go to the grocery and you're just like, okay, I need some coffee. I run out of coffee at my home. You just come, you take it from the shelf, you pay for it, you bring it home. Or for example, if you're a coffee shop, let's imagine coffee shop is a very good example as well. You need a coffee, you just find a supplier, you pay for the roasted coffee, they deliver to you, or if a supplier is, very wants to build relations with you, he gives you credit terms, so you can get the coffee first, and then you can pay like in 15 days or in 30 days. That's okay. But in both examples, you kind of get the goods. You get the physical goods. But the way we trade coffee in green coffee sector is different, because we always buy and sell the product that physically doesn't exist yet. Bear with me. For example, you all know that harvest in Brazil usually lasts from like May to August. And for example, when I was working in Russia for one of the biggest green coffee importers, what do you think when we started to buy Brazilian coffee? So we actually started to buy a year before, in autumn. So like, for example, usually in August and September, we already finished to buy Brazilian coffee for the next year. So it means like we make a contract in August for the coffee that will be harvested just in May, in June, in July, and August next year. And this is like usual situation in green coffee segment. That's okay. Otherwise, because like demand for Brazilian coffee is always very high, and if you start purchasing later, you just can face situation that you don't have it. Like you can face situation that all the exporters and producers in Brazil have already sold their product, and you just have a short, and you cannot you cannot have the situation in your company. Otherwise, where from you're going to get a profit. So we always started to buy almost a year before we get the coffee physically. And I know that I think some big roasters, they can purchase not only a year in advance, but maybe 2-3 years in advance. Like this is very common situation in green coffee sector. So this is how it works. And like contract, it's of course official document, but it relies trusted relationships between a seller and buyer, because of course it's kind of you don't pay for your coffee the same day you sign a contract. No, of course you usually pay for the coffee when it's afloat, when it's in the process of shipping to your country. So nobody from the seller side or buyer side going running after you and saying, where's my coffee, where's my money? So if you have a contract, you kind of take an obligation. It's an obligation, first of all. So when we say contract, we mean like as a seller, I take an obligation to supply you like this particular coffee in this particular volume at this agreed fixed price in like this particular period of time. And same from your side, from the side of roaster. So when you sign the contract, and I always send the contract to the roaster to sign. So this roaster, they're not going to pay once they have a contract, but still they have obligation to pay and to purchase some particular volume of some particular coffee, particular grade at a great price, of course, within some agreed period. This is how it works. Just a second, someone want to join? And so the contract usually, contains the following terms. of course, like buyers and sellers' names and requisites, coffee name and grade. So the grade kind of part of the contract all the time. Let me tell you an example. For example, Brazil, New York 2, 1780, strictly soft, fine cup. So you like often can see this name on the contract. So what does it mean? Do you know how to read it? For example, New York, abbreviation New York, means a number of defects in green coffee per 300 grams of the sample. And New York 2 means that the coffee, the sample of this particular coffee shouldn't contain more than 6 defects. And very often it means that there's shouldn't be any black beans. And of course, when we talk about Brazilian defect system, it doesn't correspond to a CA system. Yeah, for in each particular country, they have their own defect system, defect count as well. So New York 2 or 2/3, it's like the coffee shouldn't contain more than 9 defects, 3/4, 21 defects, so etc., etc., etc. For screen size, again, we can have different abbreviation. We can have like 1718. We usually don't have 90. No, we have 90 for Colombia, but for Brazil, like it's 1718. It can be like 16. 18, and it can be 15 up or 14 up. So that means that if you can see like the 17 and 18, it means that the coffee, like 90% of coffee is supposed to be this particular screen. 10% can be lower, but 90% should be screen size 17, 18. Strictly soft abbreviation means cup quality, that it's supposed to be very, delicate, sweet, mild cup. And fine cup means number of defects in cup of coffee. Because of course, when we cup coffee and we check uniformity, we always cup several cups. For Brazil, if I'm not mistaken, as we did it in, for example, in Russia, we checked 6 cups. So when we say fine cup, it means that there shouldn't be any defects in the cups. For good cup, 1 defected cup is allowed. So if you buy green coffee, if you're a green coffee supplier or if you're a roaster and you work with the commercial coffee, of course, you should know the standards for those countries you work with. And contracts usually have this definition, like coffee name and grade. Another thing that you always can find in the contract, it's a coffee volume. So, if you buy from the origin, we usually, of course, buy, the whole container. Whole container means, no matter for Arabic or for Robusta, it's like around 19,200 kg or 90.2 tons of coffee. And depending on country and bag size, it can be like 320 bags or 325 bags in case it's 59 kg in a bag. It can be 275 bags for Central America, Colombia, Peru, because they have a bigger bag size, like 69 or 70 kg. So it depends. But of course, now, like if you buy on spots from the house when coffee has been delivered as well already. So of course it can be 1 bag, it can be 2 bags, 15 bags. Yeah, so it can be some number of bags. Yeah. For the less amount of coffee, of course, for us as a wholesale sellers, it's difficult to sell like 1 kg, 2 kg. So the usual unit is a bag. Of course, price of coffee is part of the contract. It can be in cents per pound or dollars per kg, I don't know, or dollars per ton, but, same thing. It's just, different formulation, but same thing. And payment terms can be different. For example, if we buy FOB, from origin, we usually use cash against documents. That means that we usually pay when we get original documents from the exporter. It can be credit terms for some rosters. It can be, I don't know, cash against release for my client. So it means that I expect to get payment first and then I will proceed with delivery. So it can be different, but of course it's part of the contract as well. So type of package, like jute bags plus Grain Pro or vacuum pack, or sometimes it can be even in boxes for vacuum pack, like 25 kg mentioned usually on the contract. Delivery months, very important. So as I explained to you, yes, we can buy coffee before it physically available at the warehouse, yes, at the country. At the, you know, on the trees, it can be not available at the trees. So yeah, so delivery month, it's usually like, okay, I want to make a contract now, but it's going to be delivered. It will be available, for example, in 2 months at seller's warehouse. So we will take in like 3 months. And it also can be long-term contracts when roasters are allowed to pick up the coffee like within some period, like 3 months or 6 months or even like a year, to protect, you know, their volumes and to protect their price as well. Because when we have a contract, we fix the price. Delivery terms also part of the contract. And when I say delivery terms, I mean Incoterms. It's a kind of official document. It's, you know, available on the internet. You can easily find it. Just, you know, write down Incoterms. I know that they have updated it. It's like they have 2022 version. But it's actually, when we say like delivery terms, we mean who is taking responsibility for like seller or buyer for what stage. Yeah, who is going to pay for what stage of delivery, and who make insurance as well. Yeah, because we need to secure our cargo. For example, like the usual terms we use when we buy from origin, this is a FOB, free on board. So you can see like seller's obligation. So the seller deliver coffee and it bears responsibility for the coffee till this coffee reached out the port and will be loaded on the ship. And then this is a buyer's, you know, responsibility for the cargo. If something will happen with the cargo, the buyer will, you know, bear financial loss. But that's why we usually, you know, go to the insurance company and insure our cargo as well. For spot sales, we usually use ex-works condition. For example, if I want to sell coffee from Dubai to other country like Qatar or Bahrain or Saudi, it means like, okay, I give you price at ex-works condition. So it's your responsibility as a buyer to hire a transport company to ship this order, this cargo to your country, and it's your responsibility as a buyer to take care about customs procedures. But of course, I'm as a seller, I prepare all export documents you needed. I will prepare a cargo, but then that's it. So, and of course, depending on the, you know, stage, I would say, depending on the responsibility, it also affects the price. So the place of arbitration. So if something goes wrong with the, you know, with the contract, this particular contract, for example, if you buy like Ethiopia grade 1, and received some coffee like that looks like grade 3, and the seller doesn't want to, to have any kind of negotiation about it, you can go to the court and you can have a case against the seller. And on the contract, you usually have like the place in what court you go into appeal in this case. And there is also can be like the other conditions on the contract. For example, if you need a sample before the shipment start, we say like pre-shipment sample. So we usually did it, and I think they still do it in Russia, in Kildy Coffee Importers, when you buy a coffee in advance before harvest started, you usually say, okay, but of course I need pre-shipment sample to approve it before shipment is done. So, when harvest starts and when the coffee is ready for export, the seller, the exporter, send us sample, the green sample, like 300 grams, of course, to check defects, to roast, to cup, and do everything. And then we say, okay, this samples is, according to the agreed quality of the contract, please proceed with the shipment. If it's not, we say, no, it's not approved. Please send us another sample. So like this is how it works in green coffee segment, when you can ensure that you will get what is, both what is contracted. The other conditions, for example, for us, we always mention that, okay, in case you cannot pick up the cargo at agreed period, some carrying charges can be applied, because of course, like we give a price to the roaster, considering that they, will pick up the coffee at this particular month, and if it's not, we have to pay to the warehouse to store this coffee, and of course we don't want to pay it from the margin we took. Yes, so this is carrying charges we have to actually apply to the roasters we sold the coffee. So this is like very common things on the contract to be placed, to be written. Of course, contract dates and artist signs and stamps. It's always part of the contract. And so this is how we buy and sell coffee in green coffee sector. So who can buy and sell green coffee? Yes, like for example, I think not all producers can sell the coffee, because some of them, they don't produce green coffee. They just pick up cherries and sell cherries to the washing station. But I think some cooperatives, local cooperatives, they have, contracts with local exporters. And of course, we have contracts between like import companies. And like we as a green coffee supplier, we have contracts with our producers, and we have contracts with our roasters as well. And so in this case, we say that this is a forward contract. So we don't need exchange as a part of this contract. We just have direct contracts between people who sell and buy physical coffee. Yes, this is a forward contract. It's a kind of procedure of trading that was invented by exchange, but the whole market uses this tool. This is procedure, and this is very convenient. Yes, it's kind of, it's kind of sensory vocabulary, if you know what I mean. Yes, we calibrate in the industry to understand each other when we describe the coffee. Yes, same for trading coffee. We have, same vocabulary between sellers and buyers to understand, the process, to ensure every party did, the process right way. But you also can buy coffee from exchange physically. And you also can buy futures from exchange. It's not a physical coffee, it's just a futures. And then like futures contracts, it kind of, it's same forward contract. So it's like when we say coffee contract, we mean like, okay, coffee contracts in general, but then we have direct contracts, and then we have future contracts, and future contracts connect with the exchange. And when we say future contracts, like we always trade a lot of coffee, like lots. I mean, there's certain amount of coffee, and for futures contract, for Arabica, the lot size is not as for forward contract. Yes, so for future contract, it's like 37,500 pounds, or approximately 17 tons. For Robusta, it's 10 tons. So if you want to buy coffee from exchange, it always will be this quantity of coffee. It can be 1 bag or 2 bags or 3 bags, only this quantity. So tell me, before I pass the voice to Nikita, tell me if you are okay here, if you understand everything in relation with the contracts and how green coffee traded in our segment, or you have some questions. No questions. Why? I expected so many questions. Let's hope I'm a good speaker.
You're a good speaker, actually. Actually, you're a very good speaker. It's always a pleasure listening to you. But you explain so clear. So I think that's why there is no question, because actually it's very good structurized and organized material. So that's why everything is clear here. But when we add futures market here together with forward, it becomes a little bit more complicated. And after this, I think they will have some more. They might have some more questions for the forward contracts as well.
Good.
So yeah, I believe that we can move to futures contracts now. Let's speak a little bit more about this kind of contracts. The same as for the forward contracts. When you buy or sell futures contract, you don't buy coffee physically. You don't pay money for this, or you don't get paid for this coffee. However, you commit to buy or sell coffee in future. So, for example, if you buy a futures contract versus months of expiration of July 2024, meaning that you go long position, that means that in July 2024, you commit to buy and pick up 1 lot of coffee for the same price as you bought the futures contract. And the same with the short position. If you sell a futures contract, even if you don't have any futures contract, you can just go short and sell a future contract. It would mean that you commit to sell from the licensed warehouse 1 lot of coffee during the month of expiration. So, for example, if the futures is against July 2024, that means that you commit to sell this during this month. And as I mentioned, you're not supposed to pay the price or get paid at this moment when you buy or sell the future. However, you are supposed to have some kind of deposit. You must deposit initial margin, and your broker will take this margin for covering some potential losses. Because if market price changes, you might get some losses. And there is a scenario when your loss is so high that the broker will just close your position, and all your deposit will be just lost. So, but for this, we'll come a little bit further. So I suggest moving for the next slide here. Okay. So what coffee will you get when your futures is expired? Well, we have already mentioned that you know for sure that the coffee that you get was certified by C graders. So they checked the quality before this. They checked the quality and they made sure that this quality is from 9 defects to 23 defects. But as for the origin, you can get any origin from the screenshot. So you never know which origin you actually take, because there might be no origin that you want at the warehouse, at the licensed warehouse. So historically, actually, as Daria has mentioned, C market refers to centrals. So originally, certified coffee exchange quality was supposed to be from Central America countries. So from Mexico, from Salvador, Guatemala, Costa Rica, and Nicaragua. But then, of course, these origins they cover just small volume of the whole world trade, world coffee production. That's why for many years, they added more and more origins. And finally, they added Brazil, natural Brazil as well, because, well, of course, Brazil covers a large production, a large part of world production. And now it's also traded on the market, and you can also get coffee of this quality. However, what is not guaranteed is the crop year. So you can get a coffee that was from the year 1617, so 1617 crop. You can get any origin, yes. And so what else? For now, that's all. As for the location, well, you will get the quality not for you will get this coffee not from the origin. You will get it from certified licensed warehouses. And the next slide, please. Yes. So there are specific exchange licensed warehouses around the world from where you can get your coffee when your futures is expired. So you can see that for some warehouses there is a small discount, but it's not really significant. So yeah, for this slide, that's all. And here we see the list of futures contracts. So each line refers to a separate futures contract. And for each line, there is specific months of expiration. So on the left side, you can see that there is May, July, September, December, and March. There is actually a much longer list for 3 years in advance. So let's look at the second line, July 24. So this particular futures is traded with the expiration date July 24, meaning that when July comes, you're supposed to buy or sell from the certified warehouse. And if you buy this future, the price you can see right now, not right now, but it was on Friday, on the close Friday. It was 232 cents per pound. So the prices you can see it is in cents per pound. In order to transfer this into USD per megaton per ton, you need to multiply the price by 22.046, and then you will get the price that we used to that we got used to see actually. So for here, you can monitor prices on the ICE website, on the ICE exchange website. You can monitor prices on bar chart or other services. However, everywhere you will see the prices in cents per pound, and you will see that there are many different futures with different expiration date, expiration months, and every future will have this its own price, because it's totally different contract. So it's different contract with different terms, and the only thing that's that different for the contracts is the expiration date, expiration months. So I guess for this slide, that's also everything. So let's move to another one. And so why did we tell you so much about the contracts, the forward contracts as well? Because actually futures contract, it's the same contract, so it has its own terms, and we can see from this slide that well, which grade you get. You get the exchange quality. We mentioned this. You get this particular volume, 17 ton, around 17 ton actually. We also mentioned this. You will get the price. This is actually the price that you bought or sold the futures. The payment terms will be prior to delivery, before the expiration months. The delivery month is expiration months. The delivery terms is from one of the licensed warehouses that we mentioned. And so the place of arbitration, well, the ICE by itself will arbitrate in case of any issues. So for futures contracts, the terms are very standardized, and when you buy any futures contract, you know for sure that you know the rules of the game. So that's why it's so easy and clear to trade with futures, because the terms are standardized, the quality is standardized, so everything is clear for every member of the market, every participant of the market. I guess we can move to the next slide. Yes, about the participants on the market. So who are these people, companies that sell and buy futures contracts? Well, the main question is why they do this. So we have already discussed one reason why you might want to buy a futures contract is that because you want to get coffee during the months of expiration. You want to get the coffee physically. However, this is not the most popular reason why people buy and sell futures. Actually, people buy and sell futures for two other different reasons. First is to hedge the price of coffee. This is for companies that physically deal with green coffee. It's producers, roasters, and traders. We will speak about this a little bit later, about hedging. And another reason is speculation. Well, because some investors, funds, and speculators, they want to gain some profit from buying and selling futures. And about the speculation, well, that's actually interesting because first, from one side, they help us to show the right price. However, they do not deal with physical goods at all. So they never see the green coffee, of course, when they trade with futures. And so let's speak a little bit more about how we can gain some profit from the futures. The next slide, please. So very basic example. Here we can see long position, meaning that a person bought one futures at some time, let's say in October. This is the future. This is the Arabica futures for 160 cents per pound, and then in January this company sold one future for 180 cents per pound. What do we have here? We have that his net position, meaning net position is 0, meaning that he's not obliged to deliver any coffee from certified warehouse or to buy any coffee from there. So he has no physical responsibilities for the green coffee. However, he got some profit because firstly he obliged to buy for 160 and then he obliged to sell for 180. So in overall, his financial result is profit of 20 cents per pound, which is actually for one lot approximately around $7.5 thousand. So that's what would an investor get from trading this trading this deal. This is a long position when you firstly buy and then sell. Another scenario is short position. The second slide, please. Short position meaning that first you sell the futures and then you buy this future back. It means that you gain profit only when the price market goes down. Only then you gain the profit. If the market goes up, as on this slide, then you get loss. And for this particular case, there is a loss of the same amount, same $7.5 thousand. Well, for some people, it might be strange that you can sell something futures that you don't have. However, it's totally okay because, well, as I said, futures is just a commitment in the future. So and it doesn't matter if you buy futures or sell futures, you're just supposed to have some kind of deposit, some kind of margin that your broker will hold until you close your position. I guess for this, it's everything as well. Yeah. The next slide, please. And it's already your turn.
It's already mine part, yes. So
yeah.
Tell us, guys, do you have any questions regarding futures contracts? No, I think that's okay.
Everything is clear by this stage. That's good.
We did it, Nikita. So I think we still have hedge. We'll see. Okay, let's talk about how C market works as a price indicator. So it's actually, if you remember that slide about exchange grades, about exchange quality, I already mentioned that we have like premiums and discounts to trade coffee, to trade coffee at exchange. And so this procedure, this rule, extends for the green coffee market as well. So, for example, for each particular country, when we set the price according to the C market, they have their own differentials. It's kind of added cost to the C market to actually balance the cost of production depending on if C market goes up or goes down. And differential can be with minus or plus, depending on the quality you buy from like this particular country. So let me give you some examples. For example, Brazil, I think, will be a very good example. So the differential for New York 2 1780 strictly soft fine cup will be around 5 or 6 cents per pound. So we usually add this differential when we buy coffee, like light coffee or Equatorial Traders, we buy on FOB. We buy with differential +5, and of course we know that we buy with plus C market. So this is a kind of common formula for price building when you buy from origin. And so New York 2, it's kind of like, it's good quality coffee, yes, despite, of course, it's commercial coffee, commercial coffee, of course, it's still like good quality, high quality, because it just, contains 6 defects. It doesn't have any defects in the cups, and it have nice cup profile. So it's a high quality coffee if it's like commercial one. And if we look through like low grade coffee, for example, Rio Minos. So I think you know about Rio Minos. It's actually coffee with taints or defects depending on how intense it is in the cup. So Brazilian coffee very often have this Rio defect that I would associate with iodine or with some medicinal smell. So for Rio Minas, it's like kind of okay. Yeah, so all Rio Minas coffee has this slight of flavor present in the cups. So for this kind of coffee, like we can have differential, we can have minus differential. I don't know actual differential for Minas Rios now, but maybe let's imagine it will be -7. So when we have like C market, and C market now, how much is it? So it's like 227 -7, so it's going to be 220. So this is how the price builds for FOB shipments from Brazil. Yes, so in this regards, also let me explain you like what we as a green coffee supplier add to the price when you buy from me on spots when the coffee is already here, or even if it's not here, you still may have a contract. This coffee is not here, but of course, when I bring coffee in my warehouse, I need also add the cost of freight, the cost of insurance, the cost of financing. Or financing means that, we buy coffee, we pay for coffee when coffee is arrived. Yes, we pay usually, as I said, on cash against documents terms. It means when coffee afloat, our accountant pay for the coffee, but it's not always it's our own funds. We usually take these funds from the bank, so we need to pay some interest rates. And when I say financing, I mean I need to finance this coffee until I sell this coffee to some particular roaster. That's why the more coffee is on the warehouse, the more I need to pay financing, the more I need to pay storage as well. So actually my coffee is becoming more and more expensive if, I cannot sell it once it arrives at the warehouse. So I need to pay for freight, insurance, finance, storage, and of course our margin, because we need to pay salaries to our employees. We need to pay rents for our offices. We need to reimburse cost for sending you samples, for nice packaging, for the events, like etc., etc., etc. And we still need to have some small profit to continue, doing this business. So this is kind of price B. And for coffee roasters, of course, like we take this B and we need to add delivery from our warehouse to we always need to add like VAT, of course. Like we also need to consider weight loss, because when you roast green coffee, it loses some weight. And when you put like 1 kg of green coffee, you usually get like, I don't know, depending on roast, it will be like 850 grams of roasted coffee. Of course, it also, affects the price of your final product. Currency exchange, the important factor here as well, maybe not for the local market, because the local currency is very strong. But for Russia, for example, it's like, it can be a factor, because, the ruble, like pretty weak currency, and when it always becomes more cheaper and cheaper, and local green coffee suppliers will sell coffee in dollars, of course, because we buy coffee in dollars, yes. So we set price in dollars, but of course, like since we make business locally, the roasters pay us in rubles. So they need to consider like this particular currency level at the moment they transfer money. And like back in past, we faced a situation, when like the currency was like the dollar cost like 30 rubles, and then like something happened and the ruble and the dollar now costs like 60 rubles per dollar, so twice more expensive. So coffee became twice more expensive just because of the currency exchange. And I think it's it can happen not only with Russia, but with other countries where coffee is traded and where is like economic situation not as good as on the local market. So currency exchange can be a part of price formula for roasters. Package, of course, and like margin, it's again production and operational cost of the business and some profit. So, and like considering all these things like differential freight insurance, blah, 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 and considering that the market now is like 220 or 230 cents per pound, which is actually more than $5 per kg, I think you can imagine like that coffee actually is not a very cheap product and cannot be like cheap product according to the like current market level. Yes, so this is how the price built, and this is how we use C markets when we buy coffee. One thing to add here, that's not for all origins we use C market as a price indicator. There's some exceptions. For example, Ethiopia, I know that they set their own price for coffee. They don't use C market as an indicator, but of course, like C market for them somehow an indicator as well. And I have an example here as well, because when this situation in 2021 happened with frosts in Brazil, and it happened in 2021. So it was like the late 2021, like autumn, and then winter 2022. And we had the harvest period in Ethiopia, and, prices for all the coffees increased so much, very much. But for Ethiopia, for that particular year, they actually stayed at the same level because, they don't use the market to set the price for the product. But next year, prices grew up very much. And I don't know if you remember, but this is how it happened that year. It's actually, Ethiopia somehow, like Ethiopia always was like here and Brazil was here. And that year, Brazil became expensive, but Ethiopia somehow stayed at the like same level. But, in some time, of course, this balance returned, like Ethiopia is supposed to be more expensive than Brazil because producing Ethiopia takes more money than Brazil. So this is how price building for commercial coffee works. But of course, we have another segment of coffee. We have specialty coffee, and for specialty, it works a little bit different. So for specialty, we have outright price or fixed price. And here I just wanted to explain you why specialty coffee appeared like 30 years ago. When we say like specialty, I know like you all have in your minds like, okay, this score sheet, beautiful score sheets, defect count, like there's like 86, 87, 90 plus, but all this stuff, it was just, they served another purpose. And the purpose to create this new standard for coffee is just, to help farmers to get more profit from their crops, from their harvest, to help farmers, not to survive, but, but thrive, but get more funds, and for consumers, to get, some different product, a better product. That time they were ready to pay. Yeah, they were ready to pay more, but they didn't have, any different quality. So in 1996, Coffee Quality Institute created this specialty standard and started to teach coffee cuppers all around the world to become a Q graders, to determine this quality. And they started to teach farmers what to do to improve the quality of the cherries, what agricultural techniques to use, and in order for them to be able to get a product of higher quality and able to sell it at a bigger price, at the fixed price, at untied and disconnected from C market price, in order to cover the cost of production. Because as I mentioned before, and now I think you get this puzzle in your head, that besides we can't set the price of coffee because we have C market. Besides, we cannot predict, the level of C market tomorrow. The third thing here, very often when it's go down C market for the farmers, the current C level means they cannot cover the cost of production. And this is a serious problem. This has happened for so many years in a row for many producers when the market was 90 cents per pound, 100 cents per pound, or 120 cents per pound. These levels, they don't cover the cost of production for many farmers all around the world. That's why we created specialty coffee, and that's why we trade this coffee at fixed price, at price that farmers give us, not C market. And here I want you to understand this particular very important thought, that specialty coffee, it's not just about the standards, it's about the market too, to help farmers to get a bigger profit, to cover their production costs, to invest in the farms, to be secured, to be ensured that tomorrow, in 6 months, in a year, they get their profit that will cover the cost of production. And here, I think you have a question. Okay, we have a C market, we have differentials, but now you say you buy coffee at fixed price. But why, Daria? When you say, when you send us your offerings, you say but please consider that dependent on C market, my price is changing. So I know you have this question, and I'm ready to answer this question, because we hedge specialty coffee. We hedge all our coffee we buy from producers, commercial and specialty as well. And what is hedging? In general, hedging is a strategy to mitigate the risk of volatility we all, exposed. Because we buy coffee, and, this risk is not very high when you buy and sell at the same time. When you buy and sell, you don't need to hedge coffee, because you're not really exposed to this risk. But of course, when you buy coffee and you're going to sell it for extended period of time, it means that your risks to lose your profit, or maybe gain, but you're not supposed to gain from the C market. You're supposed to gain from, selling coffee, becoming higher. That's why we have to hedge all the coffee we buy. it's for me, it's hard to explain. That's why I want you, Nikita, to continue here and explain what the hedging means. Yes, like hedging, like securing the profit from changing the market price. Can you please help me here?
Let me jump in. Okay, so about the hedging, as we mentioned before, all the companies that work with green coffee, they have some kind of risk of market price changing. For example, for producer, the risk is that market price drops, market price goes down during the season. So, for example, they plan they have their financial plan for the next year, for the next crop. They think the market price will be, let's say, 2,000 cents. But during the year, market might drop to 140 cents per pound, for example. So for them, it is risk because they will get less money than they were expected. So they can actually hedge against this risk. First of all, they can actually sell. They can sign forward contracts with their buyers. So buyers would be obliged to buy the coffee for this particular price. However, during the at the start of crop, there is the questions later, I guess, just after this slide. Okay.
Later.
Yeah. So at the start of the crop, producer usually don't sell all the coffee that he has, all the volume that he's going to have during the crop. So that's why, in order to hedge his position, he can actually sell futures. And when he physically sells his coffee, they can buy the futures from the market, and in this case, he's hedging. Trader, he's also facing some risks. It depends on his position. It depends if he sold more than he bought, or he bought more than he sold. So he's also afraid of the market price fluctuations. And for roaster, well, it's obvious when price is increasing, then roaster suffers because, well, he needs to pay more for the product. He needs to pay more for the product that he buys. And sometimes it's a real problem because sometimes roasters might have some contracts with a supermarket, let's say, and there is the contracts are very long, and if roaster must supply coffee for the particular price, then roaster must hedge this risk by trading with futures, and this is the only option how he can manage this risk. So about the hedging, let's take a very easy example. The next slide, please. So yeah, it will be a little bit complicated slide, and the principle as well. However, let's simplify as much as possible. Let's say there is a trader, and this trader bought 10 containers of Arabica from Brazilian warehouse somewhere in Brazil, and he bought this volume for 220 cents per pound. So this is, let's say now, let's say in April, when the market was 230 cents per pound, and this trader, he wants to gain no margin. He doesn't want to send this coffee anywhere. He doesn't want to send it to Europe. He doesn't want to move this coffee anywhere. So all he wants is just to not lose money at all. He wants to sell this coffee at the same price as he bought this. However, the market price is always changing. And if he bought for 220 cents and the market price went down, he will probably not sell this coffee for the same price. That's why he must hedge in order to secure his even zero profit. So in order to hedge, he needs to sell approximately the same volume of coffee that he bought. For the volume of 10 containers, it will be around 11 lots of futures. Let's say it's futures against July months, because May is also expired. So it's if this scenario is in April, then let's say he hedged against July contracts. So he sold 11 lots of July contracts on the market. So, and after this, he can offer to his customers, to the market, he can offer the price of differential minus 10 cents per pound. This is differential, which is applicable against the futures, which expires in July 2024. And let's say that during the months, there will be a buyer who is ready to buy at this particular price. Let's say that after 1 month, the price went down. And let's say this price is 210 cents per pound. And with this market price, the coffee price will be market price minus differential, and it will be 200 cents per pound. That means that just for trading the coffee physically, this trader lost 20 cents per pound. However, this trader also traded the futures, and he sold futures when futures were 230 cents per pound, and then he bought, during the time when he sold the coffee, he also bought the 11 lots of futures. So he closed his short position. And with the futures trade, he gained some profit. He gained 20 cents per pound profit. So we can say that in overall, we have some loss for physical trading of Brazilian coffee, and we have some profit for the trading of the futures trading on the market. And in overall, we have like zero profit, and that was the whole idea. We just wanted to get rid of any risk of losing the money. So we can complicate this example. We can add the margin for the trader. We can actually add the delivery. So the trader can move the coffee to Europe, for example, and sell from some European warehouses. We can add financial cost to the price, to the differential. Yeah, and with this more difficult, more complicated scenario, the mechanism of hedging will work the same. So it will secure us for getting any market price losses, market price changes losses, and we will secure our margin that we were intended to get. So this particular example is, for example, when price goes down. If the price suddenly goes up, then we actually get the same result. We will get the same. Financial result. It will be also around zero. Please, next slide. So here, what changes here is just one thing: is that after 1 month, the price is not 210 cents anymore. It is 250 cents anymore. It's 250 cents. And so the market went up, and with this example, we will gain some profit from physical trade of 10 containers of Brazil. However, we will lose on the futures market, futures trade, and profit and loss, and the profit of 20 cents per pound and loss 20 cents per pound for this position will lead us to approximately zero financial result. So this is how traders actually hedge their coffee when they buy anything from origin, and until they bring it to to the country where they sell it, to the UAE, to Europe, to Japan, to US. It works actually the same, because when you buy your coffee and you do not hedge this, you're really exposed to market price changes. So you will lose a lot of money if market price goes down, because you will not sell the coffee for the same price that you bought this. So that's how the hedging concept works. If you have any questions with this, it's time.
Yeah, so it's
and there was a question
in general. In general, so hedging is kind of insurance for the price, I would say so. And it works like you do when you buy coffee physically or sell coffee physically, you do the opposite operation on the market, on the exchange. Yeah, let's see the question. So the question from Alexandra: do you think exchange in New York will get download in nearest time? And the same question about Robusta exchange. Yes, we will talk about it later. So this is the last point of our presentation, like analysis and forecast. So
we're almost there.
Yes, we're almost there.
We hope we're not tired of us.
Yes, we almost reach our 2 hours, but bear with us, please. It's just something to talk about left. Do you have any questions about hedging? I know, I think this is the most difficult topic for this webinar, and I really want you to understand the concept. Is it clear, or something need to be explained more? Okay, let's move forward then. So, purchasing strategies. I'm not going to talk much about it here, because I think, for purchasing strategies, I could have another webinar. Maybe I will make it, but I think it's important to mention it here, considering, all this information you got today about the contract, about the C market, about the trading, because as I can see, and I saw it in Russia, and I can see it here in local market, coffee roasters, they start buying coffee when, they run out coffee at their warehouse. So they just, okay, we just one bag of this Brazil left, we need to buy more. And they, reaching out their local green coffee suppliers, and they buy, and then they're surprised why the prices is so big. But, we have another reality we live in. And of course, you as a roasters, as a part of coffee supply chain, you're also part of this world, no matter if you understand it or not, no matter if you know about it or not, it still affects you in your business as well. So this, purchasing strategy, when you just buy coffee when you need it, it's, it really creates an insecure situation for roasters, because you cannot secure the quality, you cannot secure, because, each time roasters, they just buy from those suppliers who gave them a best discount, who gave them the best price, and you never can be 100% sure that, even if it's okay, like Colombia Excelso, some suppliers can have different Colombia Excelso. From some suppliers it's better in terms of cup quality, from others not that good, but still because Excelso standard is about the screen size, not about the cup quality. So you never know, you just buying blindly, depending on the supplier, and same volumes. When you need some coffee because you don't have it at your warehouse anymore, you just can face situation that your suppliers, they don't have this coffee, like it was with Brazil because of the situation in Red Sea. I know that so many roasters were looking for Brazilian coffee, but oops, like we had what we had, and you never know if you get the same quality, you never know if you get the needed volume, you never know if you can get the same price as well even. And so the only option available for roasters, just to squeeze your suppliers and just give me like best discount. Wow, this coffee costs not $6 but $8 now. How is this possible? You are so like greedy. But it's not about our greediness. It's about C market. It goes down and up. And if you like calculate the price difference, during Ramadan, it's a little bit dropped. And I was like writing on my coffee roasters, like, if you need a coffee, let's make a contract now. You can pick up it like next month, in 2 months, but let's have a contract now, because C market is very good now for making contract, for fixing the price. And they're like, huh? What does it mean? We don't understand. So they now reached me out to buy this coffee, and I say, sorry, the market now is like 200 something, and of course it's much more expensive. They was like, wow, how it happened? But like, just let me give you like insight about the difference. So it's almost like 50, 60, 70 cents per pound difference, which means more than $1, like almost $1.50, and like price increase. It's not it doesn't go to me as a green coffee supplier. It's C market increase, and affected my price. But it's not that money I get as my profit. No, it's just C market price. So when I'm saying about a better strategy, I mean that coffee roasters also need to adopt these rules, these procedures. They can have a contract with their suppliers. And with us, it always will be very beneficial, because at least we will know how much coffee we will need to bring, like this year, next year, in 5 years. We will know how much we need to buy, how much we will sell. For us, it's very, secure and sustainable situation. It really creates sustainable business throughout the supply chain, because if I know how much coffee you are as a roaster going to buy from me, I can tell my producer same thing. I can secure his quantities, and this producer will know how much coffee he will need to grow next season, and they will be confident. They will be sure that they're gonna sell this coffee to me, because they might even have already this contract. And this is really creates very healthy, sustainable relationships throughout the supply chain. But of course, to do these contracts, you need to understand the C market basics, and you also need to understand the harvest season, because of course, for different origins, in each origin they have different harvest time. Like as I said, for Brazil, it's like from May till August, but for example, for Ethiopia, it's from October to December. It's like different period of time, and of course, in like you can have a contract anytime, but for for specialty coffee, it makes sense to buying coffee, making contract, not buying physically, but making contract, when harvest season is starting, or like just after the harvest season, when you have samples, you can cup the coffee, you can try this coffee and choose what profiles and lots do you need for your roastery, for your business. That's why you need to know, because if you work with Brazil, if you work with Brazil, the earlier you do, the better. But of course, if we are talking about micro lots, we never know how much coffee, like micro lots, we're gonna have. So for Brazil, it's gonna be the best time to make contracts. Will probably be August, So you can, like, if you can go to Brazil, you always can request samples. And me as a supplier, I will be like so extremely happy if you like, Daria, we wanna Brazil. Can you please, like, we want to buy Brazil. Can you please send us some offer samples, and we will choose if you want something from you, and we will have a contract for, like, I don't know, 10, 15, 50, 60 bags for the next year. For me, it's like amazing, because my quantity is going to be secured, your quantity is going to be secured, and price will be fixed. That doesn't matter. And like for Ethiopia, the buying periods usually like December, January, February, like maybe even March, because natural coffee usually prepared later than washed coffee. And for Central America, they usually have very long-lasting harvesting period from like October till March next year. So like, if you are big roaster with many different kinds of coffee, you buy, and with big volumes, different volumes, you really need a person who knows all that stuff, who knows sea market, who knows harvest season, of course, who is a experienced copper. And it's very important to understand as a business your volumes you're going to sell next year, and your cost breakdown. I mean, like, at what price you need to buy into being ready to sell next year as well. And of course, I understand that many local business, they just, they're very opportunistic. They don't know their volumes because they just started. They don't know their prices because they just started. And they're trying to dumping with the local roasters as well. And of course, it creates super unhealthy situation on the market. So, and of course, it creates kind of, your business exists now, but tomorrow there's no guarantee it's going to exist tomorrow. So I really advise and recommend coffee roasters to adopt these rules and not being afraid to make contracts with their local green coffee suppliers or global green coffee suppliers, because it's when you know how to use it, when like you know how to invent it into your system, operational system. It really helps you to do to do better, to make a better business. And what here else to add? It's kind of beneficial for all of us, for roasters, for your consumers, who will be sure that today, tomorrow, and in a year they will get the product they get used to, they like to drink, they like to buy. And it's good for us as well, because when we are talking about green coffee business, it's about building relationships with your partners, with green coffee suppliers, with producers, with roasters, with consumers. It's not just about, okay, I can buy if you just give me $3 for the kg of your coffee. It's not how it works, actually. So yeah, if you have here, I don't know if you may have here any questions or maybe some comments, I would appreciate. If not, we will move forward to analysis of the current situation and forecasts.
Okay. Any questions? I don't see any. Yeah, okay, let's move forward in this case. So let's shortly speak of the situation we have right now and how we came here. So let's start with the Robusta market. So for the last 6 months, we have almost double market price for Robusta of what we had before. So it's on the slide, it's the futures against July 24, and the market price went up to 4,200 USD per ton. Nobody expected this. This is a historical record, and well, how we got here? The main reason is actually Vietnam, the main producing country that started to have some issues with coffee availability in around November. Already around November, there were some issues because you know that the new crop starts around January, and in November, all the crop was already sold. All the previous crop was already sold, and in Europe there was already a deficit of coffee. In Vietnam, you could not ship anything, so there was some issues with the availability. Moreover, there was a crisis in the Red Sea, so it's also added some worries to the market, and something around December, January, there were a lot of messages in the market that in Vietnam a lot of Robusta trees were just cut down, meaning that there will be a lower production of Robusta, meaning that there is going to be deficit of Robusta for the coming year. And of course, it affected the price. And during the time, we started to face more and more cases when you cannot get any Robusta. Moreover, Vietnam producers did not offer any Robusta, so they just hold their coffee because they thought that the market price should be higher. Well, and obviously, yeah, now it's higher. And of course, all this affected the market price. All this affected the situation when we have a deficit on the market. And right now, the market price is 4,500, and of course, there is no guarantee it goes down. It might be not the peak yet. Nobody will tell you this for sure. And of course, when we speak about Robusta, we must speak together with Arabica because they are connected. So the next slide, please. So Arabica and Robusta, they are substitutions, and their prices are moving not in the same direction, not always moving in the same directions. However, they are very connected. For example, when in March we had the situation where you could buy Rio Minas cheaper than Robusta from Vietnam. Of course, you understand that this situation shouldn't be forever because it's not the same quality. It's not the same quality products. And one of the reasons why we have such an increase in April for Arabica is, of course, the Robusta prices. Well, actually, for all this, all the increase of Arabica market, there are different factors, and Arabica has its own concerns about the world balance of coffee, of Arabica coffee. And for example, in October, November, why the price moved higher? Well, of course, it was also because of the logistics concern about the Red Sea. But I would say that mostly it was because of very low inventory in countries where the coffee is roasted. So, for example, in Europe, during this time, we saw the lowest in history, in history of I don't remember for sure 15 years or even more, the lowest stock of coffee and certified stock as well. So all this influenced the increase of coffee price, Arabica price, and for the recent increase, we see this mostly because of the Robusta market price increase, and We also see this because of the funds. So huge investors, funds, inflowed a lot of money into commodity market, and because of this, the demand demand increased, and of course we see this this rise. And right now the market is actually around 2.22 cents per pound. So we see some kind of correction. Nobody will tell you for sure if this correction is going to last, or we're going to have some new peaks. But there are factors for the both scenarios. So the market is actually very concerned about the world balance, the world coffee balance, because one of the most intriguing coffee consumer, which is China, started to buy a lot of coffee. Well, its growth was already high for the last. Its growth rate was already high for the last 5 years. However, for the last 6 months, their demand is in no comparison from what it was before. So there is an increase in times. And right now, the market participants are worried that with this kind of demand and with this kind of uncertainty and with this kind of political situation that we have right now, when everything can change like this because of Red Sea crisis, because of the war in Russia and Ukraine, because of US elections, China, everything can actually happen. And there is no person who will tell you for sure what's going to happen with our favorite product, coffee. And technically there is a correction. Technically there is an opportunity for further decreasing of the market price, and we might see some lower levels when we can better fix the price of coffee for some period of time. However, nobody will tell you if it's going to happen or not. The price can go up easily. Yes, Daria.
Yes, I can add regarding the Brazil harvest. Yes, it just started. So we don't know yet how it will go. So if everything will go well and Brazil will have a good harvest with big volumes, maybe it will help to correct the market. But again, we don't know because it just started. So everybody's looking at the situation worldwide, looking at the situation in Brazil. So, but nobody knows what will happen next.
There will be some clarity in June, when there's going to be a Brazil report. So everyone is waiting for this because there might be some clarity. But still, even without Brazil production, there is still so much uncertainty and so much factors that can affect the market, including the funds. Because recently funds play very significant role in market pricing of all commodities, and they influence the price too much. So for now, for this increase, it's mostly connected with the funds activity actually. Than for the fundamental factors. Well, however, as I said, there is some fundamental concerns, so nobody will tell you. Anyway, we as coffee traders, coffee roasters, coffee participants, we must adapt to any situation. And for us, it shouldn't. Well, for us, it's very important what's the price. However, even if the price is growing, we must adapt to this situation, and we must find a way how we can work. Otherwise, we can just shut down the business and don't do anything. So, and as a good example of this scenario, could you please, Daria, move to the next slide? So there is just a good example as a postscriptum to this presentation about market.
Yeah, because we still need to continue buying coffee. And when market goes up, you face the situation when you need to make this decision, either to buy now or wait because you are hoping that market will go down. But you never know, because maybe market can go up. So you never know what to do. And so, yeah, Nikita will give you like very nice example now. So
there is a real commodity. I will not tell you the name right now, but you probably know about this. Right now it's September. And price gains 33%. Of course, the first reaction for me would be that, okay, the price is too high. It was just $3,000 per megaton just several months ago. Why should I pay so much? So let's wait. The price should decrease. The next slide, please. Then some time passed, and now it's February, and price actually gained 55% more. And now it's historical record. And well, when I look into this, I think like, okay, no, it's too much. No, I should not buy my product. I should not do anything. I should wait till price goes down because, well, it's too expensive actually. So let's wait. And the next slide, please. And this is the current time. It's like today. And the price from February increased for almost doubled. The price is almost doubled. Not almost, it doubled. It gained more than twice. And the price is 11.5 thousand per ton. And well, you look at this and the first reaction is that it's not possible. However, it is possible, and this is the real commodity. This is cocoa. You probably heard about this. You probably heard in the news that the price increased significantly for this commodity. And well, the factors why this commodity increased so much is first of all the deficit of cocoa, because in the main producing countries, which are Cote d'Ivoire and Ghana, the production decreased, and that's why the market participants started to worry about this, and they couldn't just get any product for themselves. And then funds entered the market, and they started to buy futures as well, and we see this scenario. So for me, it's very similar to what we see right now with Robusta. I'm not saying that we're gonna see this with Robusta. However, there is an opportunity to see something like this, because when there is a deficit, actually it's very difficult to control the price. So the market price. So even if the price of Robusta is going up and the price of Arabica is going up as well, it's not the reason for us to shut down the business and stop roasting, because, well, the whole market will face this. The whole market will face the same situation, and the first company that adapts to the new reality, this company will benefit most. So that's the kind of summary that we wanted to show you from this part. And now I think we can get to the questions. I'm really glad that so many people bared with us for so long time.
For more than 2 hours.
Actually, we did not expect it would take so long. But
I did expect.
You expect?
Yes, I did expect.
Okay, but I'm really happy that you're with us.
So I want to show you. Yeah, I want to show you one more thing, guys. So I want to show you the website when you can follow up the market. Just a second. Let me finish with presentation and show you this website.
Yeah, the last website is just market price for the last 50 years for cocoa. So we can see that that we have the price that we have right now. It's incredibly high.
So this is a bar chart. I usually use this website to check the C market. So as I told you, we have like different kinds of exchange. You can see the upper side that you can change for Robusta. Just a second. It's like my browser needs time to download everything. So you can see here, like grains, financials, energies, again, financials, currencies, everything. You can also find here in European soft coffee Robusta. So can we change it, please? No?
Try to enter.
No, it doesn't want. But the thing is, just now, after this webinar, at least you can read and understand all these numbers, I guess. Yeah, so you can always go to like this website or other websites with this quotes, with this available data. So we usually, for our price, we usually use May futures, because now is April and closest to us month is May. So we always fix contracts against May, and so the current level is 226.65. And if you, for example, buy with a delivery in September, you will probably use futures against July. So it's going to be like 222. So it's kind of, better price for you. So it means like if you buy for future deliveries, you can kind of get a better price. And actually, there is a practice that you can have a contract, differential contract. What does it mean? It means like you don't need to have a fixed price for now when you make a contract. So you just can have a differential contract, and before your futures expired, you can fix the market. So of course, the market can go down and you can fix at a better price for you, but there is a chance that markets go up. So you just have to, you have to fixed with maybe not very good price for you, but what to do, you need to do it anyway before expiration date. So, I mean, you have some, tools to benefit. I can see that Samundra had a question here, like, how can I protect my investments during market volatility? Well, market volatility is a kind of, a reality. It doesn't just happen. It happens all the time. So hedging, as we explained earlier, can be a market tool to protect, to decrease your risks of market volatility. As I know that you now work in green coffee supplier company, so you can use hedging as well. Shall I hold my order or buy now? What is I buy now and market goes down? So yes, of course, like this is the main question for all of us now. If I'm going to buy now and market, will go down, so I'm going to, buy at the highest price. But again, you can hedge. You can hedge, and in this case, if market goes down, your price will go down as well. So it really can help. And if you're a coffee roaster and you don't know if you need to buy now or not, well, the answer will be simple, because if you need coffee, you will buy it now, no matter how high the price is now. Yes, because you need your coffee. You need to put something in your roasting machine and, deliver it to your customers. You cannot tell them, sorry guys, the C market is very high, let's wait till the next one. You will have to buy. But if you can wait, maybe it's gonna but it will be better to wait, as Nikita said, till June, and we will see some correction because of the Brazil crop. But maybe we will not. Maybe we will face another increase. As I said, nobody knows for sure. Lorena, it's 10 p.m. Australia, but these 2 hours very well interested. Thank you very much, Daria and Nikita, for sharing. Is it possible to get recording of this webinar? Of course, absolutely. We were doing recording. So I'm going to share this record hopefully this week.
Let me extend here to Samundra's question as well about shall I hold my order or buy it now? So actually, the best strategy is to always have some time in advance when your price is fixed, when you know for sure that you that for the next 3 months or 6 months you're gonna have the same price that you have right now. For this purpose, you can just speak with your trader and sign a contract with him that that you will buy coffee for this particular price. And so when it comes, when the high volatility comes, then you are actually secure. Okay, if price decreases, usually it decreases very slowly, and when it decreases, well, it takes some time till the new coffee shipments come from the origin, because the stock, because the inventory in the UAE, in Europe, it will be probably empty by the time when coffee prices come down, because, well, other people will see that the price is cheap, they will just buy it. And so that's why it's safer to fix price for some period of time, at least 3 months. Then you have some security. Actually, that's the main strategy, I think, for the roaster.
Thank you. So if there's no any questions, I think we came to end. We can finish our long-lasting webinar, hopefully very useful. Thank you, everyone, for coming.
And thank you for the comments.
Thank you for the comments. I'm glad we had them. I hope it's a good start, and we can continue in future doing some, useful webinars as well. Thank you, guys. Thank you. Thank you, Nikita.
Daria, thank you very much. Actually, I was one of the speakers, but I was so enjoying your talks about.
I knew so many new things. I knew from you so many things.
I know most of this, but it's just enjoyable to listen to you.
Thank you so much. I did enjoy too, trust me. So bye-bye, everyone. Hopefully see you next time somewhere on the planet.
And we see how people like to live. Thank you, Dasha. So let's start. Let's stop the recording.
Yeah, I'm doing it.